Yo, what's going on YouTube? I am back, man. We are going live. Finna go find some trades in the Euro pass real quick, man. It's been a while, man, since I've been on YouTube, but man, I'm just finna go through the charts a little bit, man. See what we find in the markets and stuff like that. You know, this is time, weekend, nobody working, and we can get in the charts, see what we find, man. Place trades, see if we can find some trades, man. We can't find none, we just go to the next pair. We can't find nothing else, just go to the next pair. There's always opportunity in the market, so ain't no need to be in no rush. You can always find an opportunity in the markets. So, real quick before I start, man, gotta go over the traders' core beliefs. These are basically rules that we follow. I'm going to be following as a trader. So, these are the rules. It's just a few of them. The trader core belief states that uh, markets like to U-turn at, on, and or around the same price points, right? So we like to get into the markets. We understand that the market moves in waves and that it U-turns at certain price points. And we have to ask ourselves why highs and lows are formed in the market. And it is our job as traders to find the highs and lows in the market. And we use trend lines to find past information that dictates why highs and lows have formed. So it is our job, it is my job as a trader to get in the markets, find U-turns, find these price points, and we use trend lines to find that past information to dictate why highs and lows have formed. Because the market will normally give you a history point on where the market has U-turned. So we will use the monthly time frame for direction. We use the monthly time frame for direction. We use the daily time frame for high and low prices, and we use the 1 hour time frame to set the market in the buy zones and sell zones, which is normally this is the 1 hour time frame is the time frame that we enter into the market as well in the direction of the monthly time frame. The monthly time frame will give us directions. Okay, with that out the way, man, let's go ahead and jump into it while I'm just sitting up here looking. All right, this is the Euro USD monthly. We got the daily and we got the 1 hour time frame. All right, so monthly time frame. So I'm gonna use the monthly time frame to uh, the monthly time frame is for direction. We'll use trend lines, we use Fibonacci's, we're gonna be looking for support and resistance, and we're just looking for U-turns on this monthly time frame to help give us our direction. So the idea I want to do is come into the markets, find this major low, we'll find any major low, and we'll start with this one, and we'll work our way back to see if we can, the market show history of U-turns. And perfect, honestly, that looks like a good U-turn point because you want to get more than 3 or 4 touches. But if not, mm, I mean, this could be U-turn, 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 U-turn. That could be one. Well, it could be this one. U-turn. I kind of actually like this one. Let's see. So we got U-turn, a U-turn, U-turn, U-turn. So we had a floor of resistance in February of 2015 at this angle. So we want to, let's see if we can, so we're gonna what? Let's clone this, and the market we should see some type of point where this market will find resistance. Look at that. Kind of like that. A little bit, little bit, little bit. What's that? You got resistance, resistance, broke above, hit support on the backside. Then it broke it again, found found support, and then came up. Well, I mean, this is a good point of view turn. I like it, but let's clone it again because we still got more movement. Got U-turn there. Mm, nah, not too much liking that one. But I do like this is you got resistance here, market broke up and came back down and it held backside as support. Then it went back up again, but then it came through and then it still held as support at this angle down here. Now it broke back up. So, okay, let's draw another trend line. Mm, we see this high. So, okay, so why was the market making highs here? Uh, we got touch, 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 touch. You turn. We had a little fighting between the bulls and the bears right there. But the way it looks like that's a long level of resistance right there. Matter of fact, we change these because it's red. It's kind of throwing me off a little bit. I like my monthly time frames to be purple. That just let me know that it's the month time frame when it holds the most weight. Okay, so as we see in the markets right now, you got a monthly time frame. We got U-turn, 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 right? And then on the back side, you have U-turn, U-turn, U-turn up here, U-turn there, and then market came through, broke that, but it has been holding. Um, it was holding a floor of support at this trend line that once was a ceiling of resistance, then became a floor of support. You had all the support here, U-turns, U-turns, all these monthly U-turns. Market just getting stuck and not coming below this price point or this angle. So that is a good reference point to let us know. Okay, so if the market if the market likes to U-turn at, on, and around the same price points, it is safe to say that this market is going up because we did break this downtrend. And in the past, this channel here, when it breaks, the market goes up. Let's see, look like the market goes up about 1,000 or so pips, and then even when it did it here, it went back up to that resistance point, 1,400. So it could be safe to say that the market would like to do it again and go up and retest this point of resistance in the past, like it did February of 2018, and in December 20, the new year 2021. So if we are to use that same ideology with the market U-turning here at the same price point that it did in the past, 1,390 pip probability that we can still maintain from, and we could be looking to get off of this turn, this pair right here. So let's see. All right, so I'm gonna pull out my notebook here, just take some quick notes. Let's see, matter of fact, can I Let's just pull up the text. Okay, so all right, so quickly we'll just text it, let it be known. Let's see here. So monthly time frame. Uh, monthly time frame. Monthly time frame. Um, broke through. Monthly time frame broke through a a because what's that, a downtrend? It's that downtrend channel. It broke through, broke monthly time frame broke through a downtrend channel. Held held as support on the backside of the channel, looking to buy this market. No, 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 no. Trendline held as support on the backside of the channel, giving a good sign, giving a good sign of bullish movement. So direction is up or bullish. Okay, bingo, bingo. All right. So we look, go over it again. We had support, 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 support here. Market went up. We duplicated this trend line to see if we could find uh, more areas of support and resistance. And you can see here we got resistance, resistance at this price point. Market breaks up and it likes to come back and test the backside of the trend line of this channel as support. It tests the backside of support and the market went up. Then we found another level of resistance which held and a little consolidation and back in 2012 around this price point, but then it held as resistance here, fell, and held as support on the backside of this channel, then comes right back up and hit resistance here, giving us a good idea that this market likes to return at these price levels. Then it comes down, it holds, comes back up, then breaks again, and then we get support here. Then the market comes right back up. So the market likes to U-turn around these price points. So if the market is going to go back up, we have to go to the daily time frame to find high daily time frame is for high prices and low prices. But when we go to the daily time frame, we use the daily time frame as a point to giving us the well, we have to find the U-turn levels to give us find these low prices and these high prices to where we get in. Because okay, so notebook time. Back to the trader core beliefs. The daily time frame we use high and low prices. So if we can find low prices, the market goes in our favor right away on the daily time frame. And also inverse, if we can find the high prices, the market goes in our favor right away if we look at the sell. So we use the same methodology to find high and low prices that we did on the monthly. So on the monthly time frame, what we use trend lines, uh, didn't use Fibonacci's. Actually, yeah, I could go back and maybe we could pull out a Fibonacci. Well, no, because you would bring the Fibonacci in, you would need one, two candlesticks to the left, one, two candlesticks to the right, but you don't have a proper high. So it should be a proper low, but you don't have two candlesticks to the left and two candlesticks to the right, lower than the center wick. So we wouldn't have a proper setup to do that. So in the meantime, this is this is ideology or the plan of what we're looking for with the analysis on the monthly time frame. We just direction is up. So we use the same methodology on the daily time frame that we did on the monthly. So we just bring in about a few years of data, and then we go and ask ourselves the same question that we did on the monthly time frame. So okay, why did the market make a low here? We find the low prices. Why did the market make a low here? So we just bring in a trend line and we go backwards and see if we can find any evidence of the market U-turning at that price point, giving us past levels of U-turns, evidence of U-turns. And safe to say right here, there's one level, daily time frame, change that to blue. We're trying to find the channel of U-turns or where the market likes to go. Xbox notifications. All right, so you can see here, boom, they had a market, boom, you had support here, support, support. We broke it, came back up, tested resistance, then the market fell. Then the market came back, resistance. Then we broke above it. Now it's holding support, 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 support. Okay, so it is safe to say that is a good level right there. And so now we can go up and figure out, let's clone this and see if we can find any resemblance of the market moving symmetrically when we find the points of U-turn. Let's see here. Uh, I mean, you got some candlesticks that went through, but they didn't find any type of any type of they didn't close above. So that price point, that's a big fight between the bulls and the bears. You got a lot of indecision. Then you got price hit this angle, falls. Then price came up again here, then it falls. Support, support, support. Came up again, indecision. Now, right now, a lot of indecision. 1, 2, 3, 4, 5 days of just market just holding around that price point. The market just being held. Let me see. Is there the where is that? Where's that thing? No, that's not it. That's patterns. Yeah. Okay. So I think this right? Oh no, I didn't want that. Is it the circle? Okay, yeah, I can use that. All right. So let me get rid of this. Get rid of this. Just so we can just so we can see. Let me see, we got U-turns here. Wait, come on, man. No. Man, I'm so rusty, dude. This is ridiculous. mm, Man, I'm gonna find it. I'm gonna find what I was using earlier. But you get the drift. This is not acting right. Golly. Well, I'm not gonna waste much time with it. But y'all can see the drift. I can just go use the arrows like I normally been doing. So you can see here, you got, oh no, that's the wrong thing. So you got this here, U-turn here, U-turn, U-turn. Got a lot of price action, U-turn, 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 U-turn. So you got plenty of touches showing that you got all that information that the market is respecting this level. Resistance, support, support, support. And you came back, and then it resistance, resistance now, support, 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 support. And now you got resistance, 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 more resistance here, indecision candlesticks, resistance, and right now you have more resistance. Excuse me. But letting with this information in mind, with this information in mind, right? So if the market is respecting this boundary, you got U-turn here, U-turn here, U-turn, U-turn, U-turn. If the market wants to move in this channel, then we would see the market. We'll see the market. Wait, wait, wait. No, not there, not there. Yes, if the market wants to respect this channel and move at this price point like we've been seeing in the past here, as we just showed with all of the U-turn levels, we see the market break this level that's been keeping it up since March of 2023. This angle will hold that resistance up here. Market will break, and then the market will start to fall. So monthly time frame, monthly time frame. We saw that we got a lot of touches here on this channel. We break up above this and we hold on the backside. We find this level of support. This level of resistance here at like 1.2454 price point, around that price point. But you had multiple touches here, one in March of 2018 and then February of 2021. So it's been years that the market respects this level. And then we can see in the past, the market will U-turn and travel back up to these known points of U-turn. So we're saying that we got 1,390 pips of opportunity we can get within the next coming months. Um, so this is bullish. Well, we're saying that the direction is bullish or um, going up. Then we go to the daily time frame. Daily time frame, we use the same methodology as we did on the monthly time frame. We found a channel with a lot of price action, U-turns, U-turns, U-turns. Then you have support here. Market found resistance on the other side. Then it comes up support, 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 support right now. And we got resistance, resistance, and what could possibly be resistance right now. Market's not live because it is Saturday. Look, we're just going through seeing what we can find. So right now, this market could actually be at a high price. And since we're looking to buy low, uh, since in a up market, if we're looking to go bullish or we're looking, the market's going up, we buy low and we sell high. So right now, the market is at a high price and we will not be trading, but we will be monitoring, waiting for a low price. So since we're waiting for a low price, uh, we'll just we'll keep monitor on this chart. See if we can see if we can wait the market out so it can reload, come down and give us a low price. And then once we can get a low price, we can bring in Fibonacci, say from the bottom of the bottom low here. See if we can follow Fibonacci's and see what happens. We got 1, 2 candlesticks. And we go here. All right. Bingo. And the market went up there. So the lowest point in the trend, uh, 1, 2 candlesticks to the left, 1, 2 candlesticks to the right. So we go back and we go to the lowest point, retracement, bing. And then we go up to where the market gave us a proper high. And we had a 618 retracement. Looked like we took that out. It looked like it hit right here. Yep. The market went up, hit that 618 extension, and then the market fell back down to support. So it's safe to say we can take this, place it here, boom. All right. Now let's go and clear the charts up. Get this off of here. Get this off of there. So uh, right now, you had a 618 retracement. You had a 618 retracement here, and currently have a give my horse on the line, and on that price point is 1533. Okay, let's see if we can change that. Okay, price point 15. Okay, it's already on the money. 15. Price point 15338. So that will be our daily target right here. It will be our daily fib target. Daily fib target. There it is, like that. Okay, so ideally, what we want to see is we want to see the market do something like this. So we will want to see the market break down, break this support level, hold that resistance in its channel, start to come up, start to give us waves down, wave up, wave down, wave up, wave down. The market doesn't move in straight lines. We would like to see, boom, then start seeing the market wave back up. And then we will want to buy the market right there. This is where we want to buy the market. Bingo. But that's what we wait to monitor to see. And so really there is no necessarily reason to go to the 1 hour time frame because we don't have a low price to be able to buy because we buy low, sell high. So we're at a high price right now. So there's no need to buy the market right now. So we go 1 hour time frame. Bingo. And 1 hour time frame. Just for good practice. So 1 hour time frame. When we go back to the traders' core beliefs, 1 hour time frame is where we separate the market into buy zones and sell zones. We will separate the market into buy zones and sell zones and always place our stops in the opposite zone in the direction, of the opposite zone of the direction. So same methodology as on the monthly. Well, no, it's not the same methodology as the monthly and the daily, but because the 1 hour time frame is just simply we separate the market into buy zone, sell zone. You all right, mom? Okay. You okay? My daughter. It's my baby girls. All right. So we do ask ourselves, why did the market make a low here? Then we just touch, see if we can find multiple touches. And I mean, that looks okay, but let's see if we can get more information. Pretty sure there's more touches to be had at that point. Looks good right here, right? Or what about here? Oh, this actually looks pretty good too. And you can go all the way back with this one. Boom. See? There it is, right there. And I like for my 1 hour to be, um, you can keep 1 hour blue, just like the daily. And as you can see, 1 hour time frame, you got U-turns here. So you got those U-turn, 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 U-turn. Every time the market comes to this price point, it goes up. So right now, this is what's keeping the market up. So this would be what we call our buy zone. This is our, or this would be sell zone. And you have sell zone here, and then you have buy zone here. Oh no, what's this? Okay, buy zone. Come on. Daddy, I gotta show you a video. No, are you doing something? Yeah, I'm doing something right now. But no, you go ahead, you can show me. Oh, yeah, all right. Crocodiles don't die of old age. They either die of starvation or diseases. In the wild, these bitches can live up to 70 years. And some have been recorded to live over 100. The biggest croc ever recorded was over 20 feet long. I'm coming there and watch it. Let me finish what I'm doing. Wait, Jaden, I'm coming. Well, children, boy, they always want your time, huh? It was all good. No worries, no worries. It's all good. Wait a minute, hold on. Make sure my microphone working. Yeah, okay, all right, yeah. You want to make sure my mic was on. Hey, we already been on 30 minutes. Okay, cool. So, all right, U-turn, 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 U-turn. All these U-turns, man. And as you can see, we got all the U. So this would be their buy zone, sell zone. Now, if we were looking to buy, we're not buying at the moment because the daily is at a low price. I mean, at a high price. So we would wait. We're still waiting for the daily time frame to give us a low price, but we would come and we have this counter trend line here. So long as the market is above this line, we're looking to buy. This is our buy zone. And once the market could get below here, we will be looking to sell. But the market is giving us a bullish direction. Market is going up, so we're looking to buy the market. But we're still not at a low price. But in essence, what we will be looking for is got the counter trend line. Once the market can break above this counter trend line with a bullish candlestick closed above the counter trend line, then we buy the market and we will put our stops. We will buy the market here. Wait. Yeah, we will buy the market here. Boom. That will be our buy. And then we will put our stops. Our stops will go below on the opposite side of the trend or the price point that's keeping the market up. Now get our stops out of the way of all of the market movement, all of the noise. But yeah, that would be exactly what we're looking for. Matter of fact, let's see if we can test this in the past here. If we go back and look in the past, you can see once the market is in the buy zone, when the market is in the buy zone, and we get a trend line break, like once the market breaks that trend with a bullish candlestick, break the trend with a bullish candlestick, market goes in your favor immediately. Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like on the 13th hour, then the market takes off. Market just takes off, keeps going in the buy zone. So then the market comes back down around this price point. Market comes back down around this price point. Bring another, bring another trend line, common trend line in. And I mean, y'all already can see this. Drawing it up right now. That's not a good one. Well, we're not necessarily worried about going through wicks and stuff. It's just a common trend line to help us give us an idea of when to enter the market when the bulls take control. And then we held support here. We didn't go below it. Counter trend line breaks. We'll buy the market here. 1, 2, 3, 4, 5, 6, 7. And it went up a little bit, but then we came back down. But that is essentially the drift of where we going. Because eventually, even if you bought here, it goes immediately in your favor. You might experience some drawdown a couple hours later because the market is below where we entered in, but we still didn't break below. And then you have your stops below the U-turn level in the sell zone out of the way of the noise, and then eventually the market goes into your favor as long as you hold that support. Boom, market goes in your favor, and that is how many ticks? I mean, not ticks. Ticks is that's futures. I'll get into that a little bit later. So that would be what if you did enter the market here and say you was able to get out there, that's 121 pips. That's 121 pips. And that's a lot of money right there, man. That's a lot of money just following the simple, just following this simple strategy. And that's essentially what we'll look for. But right now, market is at a high price, monthly time frame. Boom. All these resistance points. Looking for the market. The market likes to travel to known points of U-turn. We discovered we had a lot of resistance here at this price point, and we broke out. Market did break out of this down channel and tested the backside here, and now looks like this wants to go up. So we're looking to buy, but we buy low. We buy low prices. So daily time frame. Got a lot of price action on this channel here, so it looked like the market could be at a current high price, could possibly get ready to travel down to a low price. So this is not ready to trade at the moment, according to my rules and regulations. But we're waiting for a low price, and the 1 hour time frame would be separating the market to buy zone, sell zone, and we're using counter trend line breaks in the buy zone, buying the market and putting our stops in the sell zone. That's essentially what we're going to be looking to do. But okay, that is the Euro USD. Let's go ahead and let's save this. Matter of fact, let's rename this first. So this is a Euro USD. All right, we're gonna save that. All right, so now we should be able to, okay, recently used, all right. Yeah, we got the premium trucks this time. Oh no. All right, so let's see if we can open a new one. All right, let's do a new layout. And We're gonna set up our three charts and let's remove indicators, remove and have nice clean charts, remove indicators, and this will be all right. So we're going Euro USD. Let's go Euro CAD now. Wanda is my broker, so we will change all of these to Wanda. Euro Canadian dollar. All right, bet. So we got the monthly time. Wait, Euro USD. No, man. No, sir. It should be Euro CAD. Wanda. All right, got him. All right, Euro CAD. All right, Euro Canadian dollar monthly. All right, so we got the monthly time frame, and then we got the daily time frame, and then we got the 1 hour time frame. All right, so probably should be able to start speeding up a little bit now. All right, monthly traders core belief. We gonna do the same thing that we did on the Euro USD. Do the same thing on the Euro Canadian dollar. So again, when markets like the U-turn at, on, and or around the same price points, we go into the market, we ask why highs and lows are formed in the market. It is our job to find these low prices. And we use trend lines to go and find past information on why the market is U-turning at this price point. So again, we go here. Oh, I messed up. Okay, so we go to this low here. So we find this low, bing, and then we just go back and we see where can we find the U-turns. We don't want to make believe any U-turns. If it should just be straightforward. If it's not straightforward, then we leave it alone. And we just go to the next. Mm, got a few price points there, but then you see a lot. You can see a lot of consolidation. Mm, why did we make lows here? Let's see. Okay. May need to add more trim lines. Let's add more trim lines. Okay, so why did we make a high here? Mm, yeah, you can kind of see the market like making these U-turns here. Like U-turn, U-turn, U-turn. Little price action here. Like market didn't, it closed above, but then it came right back down. Hmm. Okay. So, why did the market make a low here? Let's go back and see. Oh, we got a few touches. We got touches. Hmm. Oh, I like that. So you got, mm. So see now that looks interesting. Okay, let's see here. See how we got U-turn here, U-turn. Uh-oh. See how we got U-turn, 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 U-turn. Then we got U-turn here, U-turn, 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 U-turn. But then the market broke, but then went down and tested this point of resistance, or this point of support, that was support way back in August of 2012. So it's kind of safe to say that would be a good, mm, it's a good level. Okay, that is a good price point. But you got a lot of price action here. Market going up, coming back down, a little indecision. And then you got support here. Then the market takes off, going back up, comes down, indecision at this price point, comes back up. Let's see how you got. You have support right here. Then you got resistance here. Resistance. You got the ceiling of resistance. U-turn. That's U-turns, U-turns, U-turns. And that is our job, correct? Our job is to come in and find the U-turns. And we find the past information. So, okay, if the market likes to travel, and you can see right now, when we bring in those extra trend lines, giving us more information with all of those touches, we have all these U-turn points. And right now at this price point, the market is showing that it wants to break through, but it's kind of at a stalemate. Mm, the market likes to U-turn at, on, or around the same price points. So that's why I'm not necessarily worried about this to the market breaking through this or breaking through these wicks, because the market does like the U-turn at, on, or around the same price points. So we want to get in the general idea of where the market is U-turning at. So in the past, so right now we're at a point of U-turn. The market is at a point of U-turn. So if the market wants to do as it has done in the past, which the market is above this, it is above this U-turn price point. So then we would be looking for the market to actually travel up. We'll be looking for this to travel up, possibly 1,400. Not 1,400, but yes, about 1,400 pips. That's if the market wants to do the same thing it has done in the past over the last almost decade at this price point. Holding that support, and around this price point here, resistance. But then the market broke through this little channel here and then found another place of resistance at this angle here. Support. I keep saying resistance. I'm sorry. They found support here, support there. So the arrow we're going with is bingo, the latest one, which makes us believing with the information that we have now, we're believing that this market is going up. As we see, it has been going up for months and months and months now. Since August of last year, the market has been going up. And there's a possibility that the market could go up 1,388 more pips. And we do have a Fibonacci extension, looks like. We can bring in fibs. Do we have one, two? No, we don't have it. We could have one, two to the left. No, but this center wick is higher than this one and that one. Yeah, so we still don't have a Fibonacci that's conclusive to be able to put on the charts for the monthly time frame. So, okay, we are believing that this market is going in the up direction, and we should be able to know within the next in a few more days. April is coming to a close, so we will be in May. So we should be a new candlestick coming here, started this week. So all right, monthly time frame. Let's go and type it up. Updates. So we're gonna say monthly time frame. Monthly time frame. Monthly time frame. currently holding above a known level of U-turn. Money time frame currently holding above a known level of U-turn, giving us the idea that this market is moving moving bullish, is moving up or bullish, looking to buy low prices on the daily. All right, that is the markup for this. Let's see, bring this down here. No need that being in the way. All right. So if the market is going to break this resistance at the point of U-turn, it's going to break that resistance, then it should hopefully hold as support. And then if it holds on the backside as support, then we can really buy it up to the top. So we're looking to buy this market. We go to the daily time frame, and again, daily time frame, we use the same methodology as we did on the monthly time frame. We need to find the price points. We need to find the U-turns, daily time frame. We need to find low prices. We find low prices, the market goes into our favor immediately, right away. If we're buying and if we're selling, we find the high prices to sell, and then the market goes in our favor immediately. So yeah, we use the same methodology that we did on the monthly time frame. We bring out our trend lines to find U-turns, and we come in and we look and ask the question. Okay, so why did the market U-turn here? And just pick a low. Why does the market U-turn here? Mm, As you can see, the market's been keeping that up. Let's see here. We got that. Mm, Again, we don't want to make believe anything. We just want to find a good level when we got multiple touches. So we got U-turn, 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 U-turn. And now it's holding up at support. Bingo. We like it. All right. And we bring back this is August of that's all the way up to August of last year. You can see this market. You see how you got U-turn here, U-turn, U-turn, little price action. At this price point, market is indecision. You got fight between the bulls and the bears, and the bulls win. But when we get above this line, the market has been holding it up. So since February of this year, we got support here, market goes up. And then as we get close to the line, market goes up, just keep going up. So let's duplicate this. Let's duplicate or clone. And let's see if we can find a level of resistance. And bingo. Think we found it. Think we found it. Think we found a new channel that this market was wanting to move in starting December of last year. And this has been holding for months now. So let's see, bring this back some. Again, like I said, not worried about going through wicks and bodies of candlesticks. We're just looking for a conversion, something that's going to give us an idea of exactly what the market is trying to tell us. So as you can see here, market's been holding up here, held up here. Uh, Come on, held here. Then the market came, held there again. Then on the opposite side, we got the market holding their resistance here. Resistance, resistance, resistance that could possibly be holding that resistance again, yet again. Okay. So, all right. So long as the market is staying above this line, this could be considered a low price. And what we look like now, we hit resistance. If the direction is up, we are waiting for this market to come back down to a known level of U-turn, which has been this blue line here all the way back to since July of last year, almost a whole year ago. This market been using this price point to kind of just hang around, using as resistance. Then it comes back up, resistance, resistance, and it says, okay, let's go above it and let's create a new level of resistance. And you have this U-turn, 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 and then you have U-turn, U-turn here. So we have the angle, and then we can also see, looks like here we got a little consolidation level here too. I didn't close it. So you kind of got like a little level of consolidation. Got some support there. You got some support there, and then look like you might have you some support here. Sideways movement. You know, identify that. Got to pay attention to that as well. Hmm. Okay. So daily time frame is at a high price. Monthly time frame, we identified that the market is currently breaking up on a channel that normally was holding the market up. Now it's breaking back into that zone, could possibly hold the market up to go further north to another previous point of or price point, a previous U-turn, which is about 1300 or 1400 pips away. So we're looking to buy this market. And right now we can see daily time frame is forming a new uptrend channel where you got this price point that was keeping the market down. Now it's keeping the market up since November of last year. And we got U-turn levels here. And we have another U-turn price point here, but we do have look like some consolidation, which the market broke out of that, but then it still held as resistance at the top level here. So looking for this market to come down. Going to monitor this trade as well. So this is also a high price. So we need the market to come down at a low price. So ideally, we want the market to look to do something like this. It'll just come down. We'll come up a little bit. Probably hit some resistance there. Break resistance here. Then boom. Then we look to buy there. So we're looking for this low price here. We're looking for the market to come back down around this bottom blue level to give us a low price. And once we can get that low price, then we can go to our 1 hour time frame. And again, our core traders' core belief, our 1 hour time frame is used for buy zones and sell zones. And we separate the market into buy zone and sell zones. And you always put your stops into the opposite zone. So again, let's try da, 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 da. So we're waiting on the low price. So now that we're waiting on a low price, we can go to just for good practice. We bring up the 1 hour time frame. And 1 hour time frame, we are using the same methodology. We're going to separate the market into buy zones and sell zones. So this is going to go to our, let's see what we got here. Bring in some more data. What's up, Mom? Okay. 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 So, all right. So we'll separate the market into buy zones and sell zones, right? So we need to find exactly. Okay. So let's see. So why did the market make a high here? Again, we have to use our trend lines to get information on what the market has actually been doing and what actually has been going on. We'll just come back and get some more information. Oh, is this a good point here? Bing. Okay. Oh, no, 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 no. Let's take this off. I wasn't trying to do that. Okay, erase that one. Okay, no, I don't want to draw. I just want to extend. We can see we got U-turns, 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 U-turn, U-turn. And then you got U-turns here. So this would be considered, um, well, this would be considered a buy zone, and this would be sell zone. So according to that, while we made the high there, and we got price point U-turns, uh, this would be considered the buy zone, and this would be considered the sell zone, and we would sell high prices in the sell zone. Don't necessarily just don't look too appealing. But if we bring in another trend line and we just say, okay, why don't we make a low here? And we go back. We could go back and see we got another level of price actions here. Hmm. And this could also be one too. And you can see like long as the market is at this price point, U-turn, keeping the market up, keeping the market up. Now it's keeping the market up. Yeah, that looks kind of weird, but that is why we bring in more candles. So I'll get rid of those, and let's see. Let's bring in more candles. See, okay. So why did we make a low here? Boom, 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 boom. Okay, now this looks a whole lot better. And you got more touches. You got touches here, but you have way more touches here. Mm, yeah, that looks good. Let me see. Yeah, now it's starting to look better. We have to bring in more, just bring in more candlesticks, 1 hour time frame. So, all right, now here we go. We have our, now we have our buy zone, and we have our buy zone right there, and we have our sell zone right here. We got buy zone, sell zone here, and we got all these U-turn points. Wrong one. We got all these U-turn points. You got U-turn, 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 a lot of U-turn here, a lot of support, support there, and support, and then support again. So again, same thing. So we have the market separated into what a buy zone and a sell zone. So if we were buying, if the daily time frame was at a low price right now, we would buy low in we would buy a low price in the buy zone off of a counter trend line break. So we can go back in the past and you can see as the market at this trend line at this low price, you see you bring in counter trend line breaks, boom. When the market breaks that trend line, goes in your favor immediately. Boom. Might have some drawdown, but as long as we stay above this U-turn level, market goes in your favor. Then we have one again. I can see it. Pretty sure we can see it here. We got it. We got it again. No, no. But to come down to the U. Well, we wouldn't have caught this one. But this one would have been hard to catch because it would have been like this. Then you would have. But even still, once the market broke above bearish candlestick, bullish candlestick, boom, by the market, and then it went in your favor for hours until you had more. You would have had withdrawal, or the market would have went against you. And then here we're at this low price again. Bring in counter trend line and a low price. Bring in that counter trend line like that. Market breaks above, doesn't go in our favor immediately, but it's not too long after that where the market just kind of goes a little sideways, and then as you can see again, now the markets is here, got a lot of action right here. And see, we wouldn't necessarily have bought anything here because we didn't get a counter trend line break at support at this level. But even still, the market still came through. You put your stops below, and the opposite side in the sell zone. Get away from all the noise. And then as you can see, this is a perfect example right here. This is why we get counter trend line breaks at known levels of U-turn in the buy zone. Put your stops in the sell zone away from all of the price action, and then boom, market just goes your way. Almost all almost all of March just went your way for March 23rd. Boom. Not March 23rd, but March 3rd of 23 all the way to March 12th. Like almost 7 days, 8 days of just market going in your favor. Then we didn't come back to this price point. So this will be our low point, our buy zone, where we get a touch and then we buy. Counter trend line breaks. Market just going in your favor. Boom, here we go again. Market touches. Trend line, counter trend line. There it is. Counter trend line, buy the market here. Market goes in your favor. Boom, boom, boom. Now, current current market price. So that would be the idea. That's the ideology that we look for on the 1 hour time frame once we get a low price. And once we get a low price on the daily time frame at a known level of U-turn. So once we get there, once we can get this low price at the known level of U-turn and the market holds, then we apply these rules here on the 1 hour time frame. Just come in, separate the market and buy zone, sell zone, which would basically be you see daily time frame, market should be in a downtrend. See if we can draw it up here on the 1 hour time frame. I'm probably going to take a short break after this. Been what? I've been live for an hour, 12 minutes. Yeah, go take me a quick restroom break. So in essence, what we are looking for is basically what I've been drawing up, what we've been showing so far. So daily time frame is going to a low price, right? So we're just looking for, uh, so we're looking for this market to keep trending like so, coming down, making making lower lows and lower highs. Then we get to this known level of U-turn. The market likes to U-turn at, on, or around the same price points. So then we wait for the market to hold that support and the waves just come through. But this is the point right here where we're looking to buy the market. Uh, Yeah, we're looking to buy the market right here. Bing. That's what we're looking to enter. So daily time frame travels down to the low price. We're looking to buy that. So we'll bring in, well, we will have that downtrend. So with that downtrend, we'll have the market separated into buy zones, sell zones, like so. Excuse me. Let's go ahead and cut that out. So yeah. So daily time frames at this uh known level of U-turn at support on the daily time frame. That's what it would look like on the 1 hour time frame. And then we will have this will be our buy zone, and then this will be our sell zone here, not underneath here. So this will be our sell zone. Then the market breaks into the buy zone. We get breaks into the buy zone. Then we bring in the counter trend line break, and we will buy low price in the buy zone. We'll buy that low price in the buy zone, and we put our stops in the sell zone down here. The stops will be below in the sell zone, probably below that point of U-turn. But that's what it'll look like on the daily, on the 1 hour time frame. Hold on, wait. That's get confusing because everything's the same color. So yeah, That's basically what we will be looking for once the daily time frame goes down to a low price. Yep. So that's a little while away. We will monitor this, and that is the draw up for that. We're just waiting and waiting and waiting. See if we can get a good buy zone, sell zone. Wait a minute, did I bring in? Oh yeah, that was the horizontals I bought up here. Okay, put the stops. All right, so let's get rid of that. That's essentially what we're looking for. So as long as this market is keeping it up, we were looking to buy. As soon as we can get in the sell zone, then that's what you would sell. But that's if we were looking to sell, but we're looking to buy. But that's just the practice of our entry strategy. So daily time frame, waiting for a low price. That's it. Monthly time frame, market's breaking current known level U-turn. If the market can hold above and test the backside as support, believe this market will go up. So, but as of now, we're just monitoring, waiting on a low price. Current channel, just waiting on a low price. If the market will continue to go up, we can get a low price here to buy going north. And 1 hour time frame, again, the way it would look is you would see a downtrend. It will look see some resembles a downtrend on a 1 hour time frame. Then we will wait for the market to break that downtrend, and then we will buy we will buy counter trend line breaks in the buy zone. So, all right, that's the Euro Canadian dollar, and let me go give me a quick go give me a quick drink real quick. Hold on, I'll be right back. Hold on, real quick. Yeah, stop playing around. Take a piss. In the restroom real quick. You back up? Oh. Yeah, come on. I'm still alive, yeah. I'm almost done. That could be too much longer. Hey. Alright, I'm back. Let me taste of that water. All right, we back. We back. All right, I think I got enough time to go through one more. Probably come back. Gotta go run some errands with the children. You know, it's Saturday. We'll go get up and go move out, get out them a little bit. So, all right. Let's see, make sure everything's still good. I can hear me, voice. Okay, all right, gotcha. Okay, so we just went through the EuroCAD. All right, let's go ahead and save that. Let's rename that. Just put it. Let's rename it Euro CAD. All right, so Euro CAD. All right, sorry about that. I was saying, so we got that saved. So that's saved. EuroCAD, we got Euro USD. All right, so now let's go see if we can. So let's pull up another one. Let's do a new layout because we have premium charts and we can have as many layouts as we want. All right, we're gonna do a watch list. All right, this is one of my personal favorites, the Euro Japanese yen, and let's pull up three charts. All right, Euro Japanese yen, there it is. All right, so Euro Japanese yen, Euro JPY, and this is going to be the daily time frame, and this is going to be the 1 hour time frame. All right, let's get rid of the indicators. They're gone. All right, we have a monthly, we have a daily, and we have a 1 hour. Okay, so this time around, we'll try to refrain from notes. Let's uh, see if we can go and do exactly what it is that we believe as traders. So again, as traders, our core beliefs is that the market loves to U-turn. The market loves to U-turn at known U-turn levels, and it is our job as traders to find these U-turn points and these highs and low prices, and we use trend lines to help us find high and low prices. And that is the monthly time frame, and we use the monthly time frame for direction. So we use the monthly time frame for direction. Uh, we need to put trend lines on the chart. And let's see. So we go back to this low here, and let's see what um, we'll go to this low. Boom. And let's just go back and see in time what is the market wanting to do, or what is the market telling us that it wants to do. Uh, so why did the market make a low here? Um, that would be mm, just not doing make believe. We're not trying to make believe any angles. We want pure, something that's straightforward and not forced. Which, okay, that could be believable. This one could be believable, but let's see here. Got a lot of price movement at got a lot of movement at that price point. So it's safe to say, bing, got U-turns, a lot of price action here. But then the market breaks above it, but then this price point holds it up. Price point holds it up again. All right. So if the markets move symmetrical, we will clone this trend line and see if we can find any points of U-turn where the market likes to go. I mean, that kind of looks like one right there, but we got U-turn here, and you have resistance there, support there, and support there again, and the market took off. So, yeah, you really can't ignore that level, to be honest. Oh, phone call coming in. Hold up. Oh, it's a FaceTime. Okay, so let's see. Let's get back to it. Um, yeah, that does look like a good level, but we need something a little bit more in tune with what we're looking for. And you got U-turn, U-turn, U-turn. Um, let's see. You got U-turn, 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 U-turn. Okay, that is another level. That's another level right there. You got see how you got U-turn here, U-turn there, U-turn, U-turn, and then we have more U-turns here. We're on the top level. U-turn there, yeah, U-turn here, and yeah, another U-turn there. But also, this market has been Look like there's another level of U-turns that could be possible. And we're just bringing in our trend line. I'm just trying to get the market to draw a picture of where it likes to draw U or where it likes to U-turn in the market, so I can get a better understanding of what the idea of what it is exactly that we're going to do as a trade plan. If we're going to decide we're going to look to buy this market or we're going to look to sell this market. But okay, we got U-turn here, market stays up here, and market normally kind of fights above this, but then when it gets above it, it does shoot up. Then it holds again, but then it support resistance. So this is not a level to be ignored as well. Okay, so all right, let's bring in another trend line. And let's see, why did the market make a high here? So why did the market make a high here? And it looks like, as we can see here, mm, again, not making a level make believe or forcing it. If it's just not there, it's not there. We got U-turn, U-turn, resistance, U-turn, U-turn. Hmm. Now according to this, see, according to this, right now the market is at a high price. I mean, not at a high price, but it's hitting a known level of U-turn. There's a U-turn here, resistance there, then it fights around there, then we got more fighting there, then you got resistance here, then U-turn there, U-turn, U-turn. Hmm. Hmm. So you got multiple levels of convergence, even this level right here, just straight across. So that's another level of resistance. See, so you got so you have multiple levels. Oh, and then even if you go back further, there's more. There's even more price action. That's support, resistance, and now, right now, the current price right now, resistance, which could possibly be resistance. And then even at this angle, you have resistance. The price action swings here, support. Then you got resistance here, support. So this price angle is to be respected, just like this one is. Some way back in 2007. So, um, so it's safe to say that wants to, if the market U-turns at known price levels, this is our job. This is what we do to get the direction on the monthly time frame. If the market is to move at known levels of U-turn, and we have evidence that this is a known level of U-turn, uh, let's see, pull it up. As you can see here, in the past, you got support at, on, or around the same price points, and now this same level right now is resistance, which could possibly be resistance now. Boom. The market hasn't yet to come over this price point, uh, to have yet to touch this price point since December 2014. So it is good to say that we are at a this market is at a known level of U-turn, and we are looking for this market to go down. So we're looking to sell this market. So that is the overall trade plan and how we are going to approach this market or this chart, this pair. So we go monthly and monthly time frame. Monthly time frame is what time frame is currently hitting a level of resistance. It's currently hitting a level of resistance, and if price should hold, we will look to sell this market at the known level of U-turn. All right, so we're gonna go and say that the overall direction of this market is going to be bullish. I mean, not bullish. The overall movement is going to be bearish, but that is if the market will hold that price point, and we can bring in what we call Fibonacci's, because we do have the setup. We have 1, 2 candlesticks to the left, 1, 2 candlesticks to the right, and we can bring that up 1, 2, and you have a price point. Look like the market, yeah, market hit that one. So you can bring another Fibonacci from this price point and bring it up to here of 1, 2 candlesticks to the left, 1, 2 candlesticks to the right. Market took that out. You got 1, 2. You got the lowest point, lowest retracement, which is this right here. And then you bring it up. You got 1, 2 to the left, 1, 2 to the right. So according to Fibonacci's, there is a, oh no, I messed up. Okay, so you got 1, 2 candlesticks to the left, right? 1, 2 to the left, 1, 2 to the right. This was a 382 extension. I mean, 382 retracement, and then you had the 618, the 618, which got hit. Uh, no, it actually didn't get hit there. It got took out here, but this would still be the lowest. So this would be the lowest retracement. So that 618 got took out on this blue candlestick. So we can bring that, we can bring this down up to here. All right, got it. And we can get rid of this one. All right. So with there being a 382 retracement, uh, there is, there could be a, there could be, wait, what? Oh, I messed up because I got this on. Okay, so there could be a 158282, and then so that 161, that 618 extension could could be a good point to go in, but I don't believe that the market has shown us that the market is willing to just go up straight from here. So in order for us to want to buy this market, we would uh we would need for this market to, the monthly time frame, to break above this current downtrend line, which was holding the market up, test the backside of it, and then go further up. But if it's going to hold at this price point, let's see. Okay, what is this extra line here for? Did I mess something up? Yeah, I think that was a mess up. Is that a mishap? That's a mishap. Okay, so we get rid of that one. Okay, yeah, so This price point is converging in the past. So the market has been up that price point. But from the information we are seeing, that you have multiple convergence levels of resistance here, and then you have resistance there. But we did break above this price point, which tested, and now is at multiple convergence levels of resistance. So we're ultimately looking for this market to U-turn. So if we're looking for this market to U-turn at that price point, we go to the daily time frame, and if we're looking to sell the market, selling the market, we sell high prices. We buy low prices and we sell high prices. Okay, so when we go to the daily time frame, right, we have the same methodology that we did on the monthly time frame. The same methodology that we do on the monthly time frame. We'll just bring in more candlesticks. Let's see if we can actually see something. We need to go and find the low prices. We need to find low prices. And we need to see whether or not if there's a story to be told with the price actions. So, um, we'll just go take that first major low that we can see here, and then let's see, why did the market have this many low points right here? So we just take trend line and we go back. See, we got all that price, we got all these price action. I mean, boom. Does that not look good? Yeah. In fact, let's bring in some more candles to see. Let's see how we got multiple touches, and they have multiple. Mm-hmm. We have multiple touches. This is keeping the market. So the market has been U-turning, U-turn, 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 and then we use the same methodology. Market likes to move in symmetrical angles, so we're going to clone that, and then we're not forcing it. Where we're looking to see if we have some convergence, divergence. I forgot what the word is they use, but we're looking to see if we can find price action stuff that's keeping the market down, and not worried about going through candlestick wicks. But you can see right here, this looks good to me. So, okay, here it is. Um, this looks as the new angle that the market wants to move. So we got we have multiple levels of U-turn. Uh, so we have multiple levels of U-turn here. See, market held up, U-turn, U-turn. Then the market came below and it held that support. And the market, as long as it stayed above, it normally goes up. Then it came down, came back up. The market stayed around this price point. And it's been staying in this angle since May of last year, basically almost a year. So it's been U-turn, 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 never dropping below this price point, this angle. U-turn again, multiple, 3 or 4 times. U-turn. Then we can go to the top part and see the same thing at the top. We have multiple points of U-turn. Market comes at this price point, then it just finds a ceiling and it stops. Ceiling, resistance. It just came above and just fought and fought and fought, came back, resistance, resistance. Currently, right now, market, if the market is going to hold at that price point, there is a possibility that this market could fall. Let's go here. Uh-oh, not that. There we go. Get rid of that. Daily time frame. That's right. Turn those blue. Might need to make them a little bolder because they look a little thin. All right. So bring this trend line, bring that up. And you see how the market has come up here. Stand up. Stand up. This line is keeping the market up. This is a point of U-turn. This is a price point of U-turn. Price point. Known price point of U-turn that the market has been showing us in past history. So I'll use our trend lines to go and get the past of these U-turns, looking at these U-turns, U-turns, U-turns. So right now we're at a known level of U-turn in the daily on the daily time frame, which is used for high prices and low prices at known level of U-turn. So this would be a high price to be able to go and this would be a high price for us to strategically start selling, for us to strategically start selling on the 1 hour time frame, which will kind of something look like this. It'll probably just come up a little bit more, probably have a little play around in here like that. Then we'll see the fall. Back down to a known level of U-turn. But this is where we want to sell the market. Yes. Get rid of that one. This will be where we want to sell the market right here. Once we can get the market to break, we are at this known level of U-turn. So we would want to strategically sell in the sell zone. We would like to sell high prices in the sell zone on the 1 hour time frame. So right now it's safe to say that the daily time frame is at a high price. So we go to the 1 hour time frame. 1 hour time frame, we are here to separate the market into buy zones and sell zones using the same methodology that we did on the monthly and the daily time frame. But we need to separate the market into buy zone and sell zone. So we want to, why did the market make lows here? Let's see. We grab the trend line here. Why did the market make a low there? Mm, got some movement there. And we also got movement here. Not forcing anything. It has to come. It has to come straightforward. If not, we leave it alone. Okay, I mean we got some touches here. A touch there. Okay, boom. There's and there's more multiple touches. Okay, so right now, as you can see, 1 hour time frame. All right, 1 hour time frame long. So now, hold on. Let's right. So this line is going to separate the market in a sell zone and a buy zone. So as you can see, long as the market comes, once the market is at, on, or around this blue level, this price point, the market goes up and goes up, comes to this level, goes up, come back down to this level, up, goes up again, it came down again, it goes up. So this would be our, long as the market is above this blue line, we are in the buy zone. So if we're going to sell this market, we are we need the market to do something like this. We need the market to wave down. Let me put this on. Okay. All right, so we need the market to wave. Start making its waves, making lower lows, higher lows, lower lows. Come to break into the sell zone. Give us a high price in the sell zone. Then bingo. We sell counter trend line break in the sell zone. Right there. So that is essentially what we're looking for. We we have our sell zone. Well, that's essentially what we're looking for. Okay, so let's go back over it again. All right, monthly time frame. We have a few levels of a few trend lines that help show price points. Known known levels of U-turn. The market does like to U-turn at certain price points and known levels of U-turn, and we found those using trend lines. We do have a Fibonacci. We do have a Fibonacci extension that hasn't yet been hit, but we're not really concerned about that because that would be months and years down the line. But we do have multiple levels of convergence of resistance at the current price point, where you have resistance here, and then you have this current price point does holding as a level of support in the past, and then you also have this price point down here, this angle that's keeping the market up, up, U-turn, U-turn, U-turn. And then you had this level that was keeping the market down. So you got U-turn here, U-turn, U-turn, U-turn. So so you had, yes, you had this angle here because we were seeing why we made this high, and you got this U-turns here, U-turn, U-turn. Marching moving symmetrically, you got these U-turns, and then right now you got at the top of this angle here. So we are seeing that we have multiple U-turn levels, multiple U-turn levels. Because yes, this was the, okay, so this was the angle that was keeping the market up. Then we cloned it, and then we found the level that was keeping the market down. And then this was tested as the backside and went up. And then we found another level, another angle that the market could be in. This was just extra. Uh, this was extra information to let us know that okay, we have a price point that is being hit and that is being respected in the market, along with this uh, another level of resistance here, where you got this horizontal line of resistance. So we had three convergences of showing that this could be a possible level of resistance, looking for the market to U-turn. Daily time frame, we have this up channel where right now the market is traveling to a known level of U-turn as well. Could be possibly U-turning, and we were waiting for the market. If the market is to hold and resistance and break this counter trend, which has been holding the market up for this line, been holding the market up since the 23rd of March. So it's been going up for almost a month now. And we're just waiting on this market to hold that resistance at a known level U-turn, give us the go ahead when it breaks this line here, giving us the go ahead to sell, which would give us the idea, which would look like on the 1 hour time frame where we done broke the market into buy zone, sell zone, that this uh blue level or this price point has been keeping the market up. U-turn, U-turn, U-turn. Longer the market is above this line, it is going up. So we need this market to we need this market to trend down with lower lows, higher lows, lower lows, higher lows, lower lows. Break into our sell zone. We needed to break into our sell zone. Give us a high price in the sell zone, and we will sell counter trend line breaks in the sell zone. And we will put our stops. Stop losses will go in the buy zone above that high. So if this is to if this is to come to fruition, and this is if we can get a good entry sell on the backside of this known level U-turn, hold as resistance, we can get a good entry sell that this could be possibly about a good 200 pip risk. It could be 200 pip risk, but the reward, if the market is to give us a diaphragm in like this, or if the market is going to move in that direction, so to speak, if it was to move, say if it was to right here, trade it down to a known level of U-turn, potential 660 pips to be had. And we know that it will do it because when it touched here back in August of last year, market went all the way up 1,000 pips, 1,000 pips, and then it did it again right here. We got around this price point, U-turn, and then it went all the way back to the top where it currently is now, 1,135 pips. So it's safe to say that the market could be able to, if the market is going to U-turn, that the market could U-turn all the way back down to this known level of U-turn in this channel. If the market is going to hold at resistance at the current price point where it is right now. So that is all of the information. Man, that felt good. It looks good. That is, let's save it real quick. Let's rename it. This is Euro JPY. We're gonna save that. All right, and all right, y'all. I think I'm gonna end it. I'm gonna end it right here. I've been live for 2 hours now. Uh, Obviously, y'all can hear them kids, man. They are ready to move around. So that is what I'm seeing. Those three charts. We'll come back with some more later on tonight. All depends on how early I have to go to work in the morning. It may be tomorrow when I go live again. That's what I'm seeing, man. I'm starting fresh, new trading journey. Like I said, I was posting videos 5 years ago, but it's been a while since I posted because I just kind of lost interest. So many other fake gurus going around, man. And, I mean, I didn't fall for nobody giving me no fake scams and fall for no scams in forex or no type of trading like that. But it's just I kind of got discouraged because people started looking at me as, oh well, you a fraud, this that, scam, and then it was like I wasn't getting no traction. So I was looking at trading more from a standpoint of trying to teach because that's what the people was that I was involved with was telling me, oh well, it's time to get people to sign up and get that recurring income off of their subscriptions and I just didn't feel like it just didn't feel genuine. So basically, I'm just back sharing my what I'm seeing in the charts, following the methodology, sticking to rules and as a trader, which they call it the trader's core beliefs. Yes, I did find a specific home. I am a part of the traders agency with Joshua Martinez. I followed him from Market Traders Institute. So this is kind of what they teach in their on their platforms. And to be honest, it is actually working for me. So, but we'll see. I plan on being consistent this go around because I am passionate about trading. I do want to make this I do want to become successful. I do want to make this a full-time income and to be able to retire my job. I currently am a truck driver and I would love to be able to spend more time at home with family, vacations, and just have financial freedom. And I know I can get it doing trading. It's gonna take a while, but we'll get there. So, yeah, with that being said, man, I'm getting out of here. I'll be back.